Hello everyone. I will cover Chapter 7 in this lecture. This chapter is about analyzing common stocks. And these are the concepts that we will cover in this chapter. So we start with security analysis. So what is security analysis? It is the process of gathering information and interpreting that information to determine the intrinsic value of a stock. Intrinsic value is what we call as the true value or the underlying worth of a stock. So in general, an investor will buy a stock whose market price is less than its intrinsic value. So the investor will expect the market value to rise and match the intrinsic value, and in the process create returns for them. So intrinsic value depends on several factors such as future cash flow, the discount rate, and the risk associated with the company's business. So to understand these aspects, so we engage in security analysis. It's a top-down approach. We start with economic analysis, that is understanding the macro environment. Then the industry analysis, we look at industry-specific factors, and then we do a fundamental analysis, that is we do an analysis of the financial condition of the company. So this will help us to understand whether the company can do better business in future, and that will help the share price to rise. So there is a debate whether security analysis is required, particularly fundamental analysis, that is doing a interpretation of the financial information of the company. So those who support fundamental analysis, they say that investors can do a fundamental analysis to identify stocks where the intrinsic value is different from their market value. So this will help us to understand if there is a mispricing and scope for returns in future. Those who oppose fundamental analysis, they believe that markets are efficient. That is, markets incorporate all relevant information in order to determine the stock price. So it is difficult to identify any mispricing using fundamental analysis. The reality is, however, somewhere in between. So markets are efficient to some extent because they incorporate different information in trying to finalize the stock price. However, the markets are not always efficient. So there are some pricing errors inevitable, and that kind of discrepancy in pricing can be identified through fundamental analysis. So both fundamental analysis as well as market efficiency are relevant. So now we look at the first stage of security analysis, that is economic analysis. So we look at the underlying economic condition and how it can impact share prices. So if you notice in this graph, the bands, the dark bands represent economic downturn or recession. And we notice that the markets, the stock markets in particular, tend to decline before recession begins, and they tend to rise again before recession ends. So this is an important information which we will find helpful. So economic analysis, as the name suggests, looks at the economic factors and the overall economic conditions which will impact the company's business, profitability, sales, and so on. And that will have a bearing on this share price. So some of the economic factors which help us to understand the economic condition is government fiscal policy, monetary policy, and other factors such as inflation, foreign exchange rate, consumer spending, and so on. So these are a brief explanation of different economic factors that we consider during economic analysis. So what is the source of information for economic analysis? So we can refer to the business press, and they provide a lot of information. They provide a lot of explanation on the economic outlook. They themselves look at different economic factors and interpret how that is going to uh, impact the economic situation. So based on that information, we can find out which industries will benefit and which industries will be negatively impacted. So that gives us the basis for focusing on certain profitable industries and avoid poor performing industries. So how is an economic outlook developed? So it is developed based on different economic factors. So for example, GDP growth rate, industrial production, inflation. So based on the trends in these economic factors, we can figure out what will be the impact on the stock market or what will be the impact on specific sections of the stock market. So accordingly, we will identify industries which will do well and which are expected to perform poorly. Another important factor is the stock market itself. So as I mentioned in a previous slide, stock market starts to decline before recession starts and starts to rise before recession ends. So even the stock market trends is also a good indicator of economic growth. So now we look at the next level of analysis, that is industry analysis. So now we know the economic factors, and based on that, we may be able to identify some good performing and poor performing industry. So industry analysis tries to look at the industry performance. So in this case, we consider different economic variables, different business related variables, and try to find the competitive position of an industry with respect to other industries, and also try to identify promising companies within a focus industry. So what are some of the factors which help us to understand strength or the weakness of an industry? It's like uh, industry regulations, labor, technology, economic conditions, how they impact the industry. If the impact is positive, then we should consider investing in that industry and do further analysis to find promising companies. So the industry itself goes through a growth cycle. An industry in its initial stages is new and a lot of high risk involved because it does not have any proven or established product. After some time, there is some established product which helps the industry to grow, and investors become interested because the industry is growing and they expect the stock price to also increase. After that, the industry matures, and now the industry growth is in line with the economic growth. So it is not growing by virtue of its own potential. And after that, the industry may decline because the products may become obsolete and the companies may start leaving the industry, or the companies may decline and shut down. So the industry life cycle is also an important source of information to understand the attractiveness of different industries. So what is the source of information? Again, business press is an important source of information which helps us to get relevant information and understand the attractiveness of an industry. So we look at the demand for the industry's product, the potential for sales, research and development, how much innovation is happening so that the industry remains competitive. So these sort of information help us to understand the industry's future potential. So I'll stop here and I will continue with the rest of the chapter in the next presentation. Thank you.